It's a big week ahead in finance, and to take us through it, it's good evening again to Scott Phillips from Motley. The Reserve Bank decision on interest rates comes on Tuesday. Scott, I think we all know what that will be, but the big question is what the RBA does about stimulus given the extended lockdown since their last meeting.
Yeah, Peter, good evening. You're dead right. You don't have to be Nostradamus to know they'll keep rates on hold. But that extra stimulus, the so-called bond buying program, that's the bit that was supposed to be tapering about now or maybe next month. But the key question, as you rightly say, is what does it mean for long-term interest rates, given the RBA's need to somewhat do its part to keep the economy ticking along? I wouldn't be at all surprised and push that out a little bit. We may not find out, by the way, on Tuesday. It may take till later in the week or maybe even next week. But as you rightly point out, they can't do much with rates, or they won't do much with rates. It really comes down to how much else they can do elsewhere, and I think they'll do their bit. So
that means we wait for their comments, correct? Is that right?
Correct. Yeah. The RBA minutes will give us the sense of what they said at the meeting and also what they're planning moving forward. And most importantly, too, how they feel about the economy. As always, it's those words on the last paragraph in the statement where they say, here's how we think the economy is going, here's what we're looking for. They're the big ones. Tomorrow we get figures, and I know you always tell us it says a lot about the economy, and that's the manufacturing purchases. Yeah, that's right. So you think about, confidence is what drives the economy, but manufacturing purchases, this is the very beginning of the supply chain. This is where manufacturers say, I'm going to go and buy my inventory to make my widgets, whatever I'm making, and put it out into the trade. Now, if you're a manufacturer and you're worried about demand, you're probably going to hold off buying an inventory because you've got an overdraft or you've got bills to pay. If you think demand's going to be good, you're going to buy lots of that product. And unfortunately, these things are self-fulfilling prophecies. If manufacturing hold back, they won't make the products. That means there's no stimulus back into the economy. So it's both a pull and a push factor. And as you say, really will tell us what's going on. Fingers crossed, manufacturing can see a way out of the pandemic, and that should be reflected in tomorrow's numbers. OK, housing values tomorrow as well from CoreLogic. It'll be fascinating to see whether the Sydney and Melbourne lockdowns have actually slowed those skyrocketing home prices. That's right, and that was the expectation this time last year as well, of course. We remember, there was some sense of maybe house prices would crash up to 30%, according to some people. It went the absolute opposite way. It's anyone's guess, but I've got to say the most recent numbers were incredibly strong, 1 and 1.5% monthly, which translates somewhere close to 15 or 18% annualised. I don't know if it'd be quite that strong, and as you say, we'll see whether buyers have maybe taken a step back. I wouldn't be at all surprised if those numbers remain really strong. OK, double dose on Wednesday, spending news, retail trade, new car sales. Yeah, and this is the other side. We talked about the kind of the early in the supply chain factor. When it comes to retail sales on new cars, that's absolutely us consumers putting our money where our mouth is, literally going and buying those cars. Now, of course, these are June numbers. So we're now into August, and to some degree, the pandemic got worse in the last month. Maybe it wasn't quite as bad in June. So we've got to put a little asterisk against those numbers as we have for the past couple of weeks. But it will tell us what consumers were spending and might give us a sense of how we went into those lockdowns. Hopefully we'll see what happens coming out as well in a month or so. And very quickly to wrap us up, the share market, where do you think we'll be sitting at the end of August? Are you prepared to say? I've been around long enough not to make forecasts, Peter. That's a trap for young players. What I will say is the market seems to be powering ahead. This is earnings season in August. I think it'll be a good earnings season. We've had a really good corporate circumstance over the last 12 months despite the pandemic. That'll be reflected in good numbers, I think. Scott Phillips, Chief Investment Officer, Motley. As always, thanks for joining us on the Late News. Thanks, Peter.